Hello traders, this is Dennis, aka Stock Operator. Decided to make a video for Livefire. He asked me a question. How would you grade the market based on this checklist? So I posted this checklist on Twitter and I wrote, know when is the right time to be involved with the market. Don't let emotions control you. So pretty much we gotta know when is the right time to be risk on, risk off, on the long side or short side, and or see it on the site if you biased one way, not necessarily biased. If you're just a long trader, you should know certain conditions when you should be participating. Same applies for the short traders, right? So markets moves in waves. Sometimes market more bullish, sometimes they neutral, sometimes they bearish. And it's very important not to be bearish when the market moving upward, right? So you have to know certain criteria, certain market conditions when to act properly. And I wrote here, we only should trade A plus setups. So, and below, as you can see, criteria for A plus setups, A plus market, it's not minus, it's A market, right? A sector, A stock. So there's a lot of details going in every single portion here. And of course, your performance should be superb, A plus performance, right? So if you cannot perform well, you're distracted, not focused, or having any other issues, it doesn't matter how good is the market, sector, or stock you pick in, you still can perform poor, right? You still have a loser or something because of your performance. But pretty much everything should be A quality opportunity. So here's the checklist, right? Before and during market hours, what questions to ask? First of all, it is important to have some sort of a checklist to keep you thinking, right? When you start thinking and analyzing the market, the price movements, emotions go away, and you become more analytical, right? Always ask yourself a question: how is the market? Um, what is going on with the market? Are we trending? How are we holding 8 and 21 AMA? Are we breaking down below this moving averages? Are we respecting them? What is the overall sentiment on the market? What is the fear on the market or greed indicator showing us, right? So are we overbought, oversold? Then you look at your holdings. If you have any holdings, look at them, how they're moving, right? Are they up and down? Are they steadily growing higher, grinding higher? Um, then it's very important to understand the conditions for buying or taking profits. So if you have some open positions, the first thing for you is your job is actually manage those positions before you take on new ones. That should be priority number one. Manage those positions, and you should understand: is there a time right now to lock some money based on your system, of course, not just because it starts selling and you zoomed in on a smaller time frame. So you always have to look at the bigger time frames and follow the system, right? Is this the best cost opportunity? What does it mean? Let's say you want to buy a stock and you look at the market is not good, and then you look at the sector, it's not the best sector, but stock looking great, has great numbers, fundamental, and technically is breaking out. So that's not the best cost opportunity because of the market and sector being poor. So you might not get that breakout or pullback bounce, and it might take longer time for you to sit for this trade, right? It might work, but it might take 2 weeks, and this is called the cost opportunity because you're locking your money for, instead of like it starts working immediately, you lock in there for 2 weeks instead of putting your money somewhere else where they can start working for you, right? Then you look at your watch list. You look at your watch list. You look at the FANG name watch list. See how those stocks moving. You look at the ETF watch list. see how ETFs moving, right? It's going to give you an idea what's going on with the market, what's under the hood. It's so important to understand. And then after that, you already have a vision like, oh, okay, should I be risk on today or risk off? So you see the process here. So it eliminates emotions. So really you shouldn't have any emotions because you have a system and a checklist you're following. Okay, let's say it's a risk on, right? Let's say it's a good market conditions for the long side and it's a risk on. Is it extended at this time right now, at particular time for you to buy, right? Stock. If it's extended, okay, great. Well, you probably should wait for the pullback. You should wait for better intraday support build up or something, right? And of course, does it have enough risk to reward, at least 5 to 1? It's so important to understand that. And then important indicator is volume. So not only how the price is moving, which is number one indicator, but the volume. Do we have buyers, institutional buyers providing support on this breakout? Not only retail traders, because retail can bring some volume, but who controls the stocks and everything? Institutions. If institutions decide to sell on a pop, all those retails wouldn't be able to support stock from falling down. They will be exiting really quick because most of them are day traders, scalpers, and most of them don't know what to do. And most of them trading on shorter time frames, right? So very often we see these runs and then institutions come and sell. So again, how can you understand that? By thinking like an institution and look at the bigger picture, answering these questions, right? So pretty much that's how I would go for this checklist and understand my risk for the day. Should I be involved in just, how much should I be involved? Like, should I be involved at all, right, in the market? And we can look here at SPY, for example, S&P 500, right? So what do we see here? We see here the stock, the ETF couldn't break new high. We couldn't close. We broke, but we couldn't close. And then kind of broke below. And not only we broke, we actually closed on open twice on these days below 8 EMA. This is the first sign of something is changing, right? And we cannot close above the prior breakout area. So sign of weakness. And of course, we had a surprise with Thanksgiving. With the new COVID, as you can see, the volume dropped really bad. This was already a change in behavior. I want you to understand how markets turn around. They're not just, unless we're having some really, really bad news, market can sell just straight up, straight down line, right? When the fear is like at zero, which is like the highest fear, right? We can sell down. But usually markets turn around slowly, right? And there is a process behind that. Institutions can't just like sell, right, or short all full position. They have to build positions. The same for the long side. They have to build positions properly, right? So, and that's why we have this gap down, gap up. People like, oh, it's time to buy, then it's gap down, time to short, and then we having a gap up again today. What is really going on? And then even today, as you can see, we tried to go higher. And that was a pure fake out. So far at this point, we have lower high right here. And now we're creating another lower high, rejecting prior day and moving averages. And as you can see, first time moving averages getting into the cross territory. If we start breaking down, we're getting into the trending down market. Keep in mind, we have this level right here on the way, right? Possible bounce and the 50-day moving average. We might get down here and start consolidate and squeeze down. And who knows if it's going to be a long consolidation here and break down lower, or just consolidation and go back higher. We don't know yet, but at this point, the whole entire picture right here is already started right here. This 3 days, fourth day today, telling us how is the market? Not good. For the long side is really poor. Okay, how's my holdings? Well, I don't have any holdings, just some short positions. Okay. Is it a good condition to buy? No. You can look at so many stocks. Let's look at examples. Strong sector, Lucid, LI, XPEF. Is it time to buy these stocks? No, absolutely no. When was it a good time to buy? When they were breaking into stage 2. Now it's extension from all of the moving averages, from the weeklies. As you can see, it's not a good time to buy. As you can see, huge extension. Okay, so conditions for taking profits. Yes, conditions for taking profits. And you can see on many stocks. Let's look at, for example, what I was talking today, Netflix and FLX, right? Not only is this a good short today, but this is also for you time to get out of your long positions if you're holding something still here for the 50-day moving average bonds, right? And flip your position probably for the short setup, risking this pivot point, right? Expecting for the stock to go back down at least to this moving average, or probably even lower to test the 600 psychological number. And then you look at the watch list, and this is, I'm breaking down actual examples for you, right? Look at the watch list. Let's look at the max list, watch list, strong names, right? Tesla, we have Amazon, look at them. Look at these big names. Baba going down, they all in decline. They all already riding this moving averages down. Square, look at this. Look at this, many of them. Microsoft still holding on, and Apple still holding on. And this is the last resort for institutions to park their money, because those are the best, pretty much the best two companies in the world. And they have a lot of cash, a lot of good products, and institutions just, lastly, when the markets start turning down, they put their money there. NVIDIA, I mean, great company and everything, but this is not a buy for long-term investment. This is not a buy for short-term swing longs. This is not a buy. Look how it's extended. Here's Netflix again. Look at this Baidu. Look at Facebook losing levels, important levels. Google getting squeezed between these moving averages. Is about to lose it. I don't know, but still riding this moving average, still looking good on a weekly. Twitter losing it, right? Okay, so we got a picture. Then, of course, I have market, right? Lots of different ETFs here. You glance at this, look at this by chart, see how they look, and where are we standing in the market. So also important to look at small caps, IVM. What are small caps doing? Because small caps is 2,000 companies compared to Dow, 30 companies, or S&P 500, 500 companies, right? Here's 2,000 companies, and they represent majority of the market, no huge amount of the market, right? It's so important to understand, if many companies selling, acting so poor, what do you expect, right? You kind of have this expectation right now built. Okay, so I have a watch list. Stocks that in decline, stage 4 already. Let's look at them, how they're moving. Look at them. They keep downtrending, riding moving averages. Beautiful downtrends on many of them. Look, they still keep breaking down. There's no buying on these names. Lemonade, PayPal, great companies, but it doesn't matter. The cycle is important. They all in downtrend. Look at this. Square today is just keep breaking lower. Is this a time to buy? Well, you don't have to be the first one to buy when they're extending down like this, because they're in downtrend. Right? We have to cross moving averages first. Look at the Snapchat. It's kind of holding up there a little bit. Pins, Baidu. Baidu still kind of holding sideways here. Then another watch list. Power earnings gaps. I'm not going to go through all of them, but just give you an example. Like some shorts, look at this. Setting up for the short setup, squeezing between moving averages, losing it. PWR, just a moment ago, trigger short setup, 114 short. Look at this. This one's holding. Look at this. Grinding down, VRTV. And this is all strong companies from the prior 2 quarters that have been uptrending, and they slowly changing their direction. Look at this. KNX, it's still at the minor support here. If it starts losing this, most likely it's going to drop hard down quickly, because there's not enough support right here. we got here by elevator, minor pullback and just bounce. So if we're gonna lose it, we're gonna go back down, test some levels here. Look at Saya losing it too, and it's a great short setup too, right? You see a bunch of tails upwards, rejecting some levels. TPR, look at this one rejecting. Chipotle started, many of them started this sell-offs earlier, 2 weeks ago, a month ago. Williams Sonoma, this one Skeen, also I mentioned for the potential short setup. This one, look at this, INMD was a great short setup we were talking about right here. And you have to be really patient, understand they can be really volatile right here, right? When you're shorting on a breakdown, something like this, you have to understand that very often they can spike back and, you know, test some levels. But you see, the moving average started to cross and trending down. Let's look at a few more here. Not all of them gonna sell, right? UPST coming to the first possible bounce on a daily, right? 200-day moving average. HLI. Here's a good one, AFRM. I shorted the stock a few times, got out of the play, my own mistake because of high volatility. Right here, I was shorting right here 3 days ago. Rejection on a breakdown. I think it was right there. And got out the next day, right here at the break even. I think something like that happened there. Should understand where you put your stops on stocks like that, right? So it's 1, 2, 3 days, yeah. So very often we tend to zoom in on the smaller time frames, right? 10, 15, whatever it could be, and just, you know, panic or get out for no reason. This stock is in downtrend right now. It's the beginning of downtrend. So if you're shorting, you should stick to your plan and follow the plan on a daily. You got a moving average cross right now, right here. So I think this one's gonna break down lower and just continue sell off. Look at this MDB into the earnings selling. ASAN, look at that one. It was a great short right here. A little aggressive, a little fast. You have to be really quick here. But look at this. Pop was really slow on the low volume. Contraction of volatility right here. As you can see, this day is getting smaller. It's building a bear flag, and then boom. Attempted to break higher, was a fake breakout, and then when it started to break down lower the same day, this could be a good first short, right? And aiding short when it starts breaking down below this prior day low, aiding to a short, and of course you have to respect the stop right here. And now into the earnings, this is the only problem. You probably should cover some. Look at Bill, same example, right? All right, let me show you some of the trades I took today. Where's my weekly list? Some of the short setups I'm in right now. TTD, similar setup. Let me explain to you why. So this is extended stock. Look at this, how extended. We got there really quick. We got there really quick from here to here, 65%. Is it good? Great, right? If you're on the long side, but it's not enough support. We got there by elevator. Look at this. This pulled back on the lower volume, and we can go down taking elevator too, right? Great company, great earnings and everything, right? But it's so important to understand the market and everything. So this is not a long buy, but it's a short setup. Again, with the shorting, I was trying to short last week, I think last week on some of these setups, and it was really tough. So sometimes you really just have to wait for the double top. As you can see, this is a double top setup. This is lower high compared to this one, rejection of these two levels. Yesterday, it was a fake out, could be a good short yesterday. I took a short today right here, 103.60 when we actually started to reject. Oh no, I took it right here when it started to break down 103. Stop high of the day, small position, because we know exactly. You have a 20 EMA here, it's still trending. But overall picture tells me like possibly this is something that go back down towards this 10 weekly moving average at 91.50. Somewhere around this 90, 91.50. So let's see what we're gonna do there. Here's another one I took today, AMD, still actually going down, coming to my another target. Possibly I took a bigger position there because my risk was I sold some right here, 153 and some. Semiconductors been really strong, but look at the weekly. Look at the weekly, how extended are we? And very important to understand, every time we get this extension, stock tend to pull back. You can go back in history and see what's happening. Extension, pull back. And now this is a very important lesson. So we have this high on here, closed on a high, could not close. We broke yesterday, but we could not. Look at the selling coming in yesterday. Huge amount of selling. What happened after that? Closed relatively weak. Today, opening higher. So during the bearish and bullish markets, stocks gap up and gap down differently, right? When we start turning down and it's a little bit of bearish market, right? A bearish movement, stocks tend to gap up instead of gap down in a bullish market. So that's what we have in here. Gap up, they're shorting, and then shorting at good prices, and it goes down. Very often they make movements kind of like here or here. It looks like it might go higher and people coming in and buying, and then they shorting, and then stocks start dropping and they covering their positions into those stops. So it's a very interesting game how they manipulate prices and markets. As you can see, Q is still selling. Here's another stock I shorted, RBLX. Very similar setup, high quality name, right? But this is not sustainable. 80%, what do we expect? Well, I would say we should expect a pullback back to 103, 105. That's 50% pullback. People are going to be buying there. So I think 100 is somewhere here, maybe 20 MA, 110 could be a good area to buy. What is this? Rejection of this level, lower high, again, the same similar setup. Very similar setups. And you could see these setups forming 2 weeks ago, 4 weeks ago on some of the stocks. So the theme is already started, right? And we already know that there's more declining names than advancing names. Also, what do we have here? The breakdown of the trend line, wedge, whatever you want to call it, right? So also breakdown, decent breakdown below this moving average. Look at the volume increasing, right? And here's an example of me buying some long position, hedging myself because the market really looks weak, and possibly we can catch this QID, which is a reverse ETF of the QQQ. If Q's gonna sell hard, I'm expecting this QAD actually not only we just broke the trend line, but actually break above this level and start maybe pushing higher. Same type of scenario we had it here, we had here. Yeah, this is a little longer video, but I hope you guys learned something. If you have any questions, let me know. All right, take care.